Welcome to ETM Analytics' inaugural Market Snap podcast, where our analysts get the opportunity to share something interesting that they've been working on. Now, first up in the hot seat is Andrew Hyde. He is an analyst here at ETM Analytics with a special focus on currency futures. And I mean, what an interesting field to be tracking at this point in time. But Andrew, is it just me, or is the US dollar seemingly losing some of its safe haven appeal?
Yes, Ilza, we've seen a big shift in the currency futures. The US dollar in the spot market has been on a sharp decline. We see the Dixie index now below 100. And this was really ignited by the Liberation Day tariffs that Trump levied. And we saw an escalation in trade tensions, what looks to be the start of a trade war with China and the US. And really the dollar has really taken a knock amid this environment.
Yeah. So if you're telling me that investors are it seems like they're rejecting and pivoting away from the US dollar, where are they going? Because they obviously have to take their money somewhere. So where is that place?
It's interesting, amid a backdrop that's really uncertain, where volatility is heightened, you'd actually typically see the US dollar attracting safe haven flows as risk off tensions kind of rise. So now we've actually seen the euro, the Japanese yen, and the Swiss franc really attract a lot of safe haven flows. And in the futures markets, speculators, the non-commercial traders, actually turning more bullish on those hard currencies. And it's interesting because this has come at a time where the central banks of these currencies have actually increased the amount of interest rate cutting risk, which is typically currency negative. So really, the picture looks a little bit grim for the dollar. The options market pretty much looks the same way, where you've got the hard currencies outlook and positioning is quite bullish, and for the US, quite bearish.
So if you have to stick your neck out, what would your view be for the US dollar in the short to medium term then?
Well, I'm quite bearish on the dollar. Granted that the information can change, and it has been changing quite quickly, different announcements, getting updates on negotiations on the trade situation. But I'm bearish for, I think, two main reasons. The one is that the imposition or imposing tariffs on imports into the US, obviously that reduction in imports that we expect to come, that'll lead to a reduction in outflows of US dollars to purchase those exports. Now, the situation is that with less dollars in the rest of the world, we kind of fall into the situation where it's a lower liquid or dollar liquid environment. Now, what you could see is other currencies or other countries then pivot using other types of hard currency to settle, commodity, financial market, and other trade contracts. And then the second is that there are growth concerns with the US. The business cycle was maturing before Trump took office. And the shift in policy that has come since he's taken office has really kind of catalyzed this downturn of the business cycle. So we've really seen a theme of US exceptionalism play out the last 2 years. But, this might actually be the beginning of the end as, the growth slows down. Certainly businesses, consumers, and financial markets are pricing in a weaker growth environment, and that's all dollar negative.
Well, with the flip-flopping statements continuing to come out of the White House, I suppose anything at this point in time is possible. So only time will tell. Andrew, thank you very much.
Thank you.